Welcome back, listeners, and we're going to find out how to make some money in what is a very challenging environment. We're going to have a discussion with Peta Hall, CEO of BPM Financial, who is an investment expert. Peta Rose, how are you?
Hi, Aldo. I'm fine, thank you.
Great. Just so we have some context here, what is BPM Financial, or who is BPM Financial?
Okay, about a year ago, Barita Portfolio Management changed its name to become BPM Financial. Mm-hmm. One of the reasons why we did that is that we recognize that there's a whole slew of the population that really does not invest and sees portfolio management, or the word portfolio, as being something beyond them. Mm-hmm. You know, it only speaks to people with money, because a lot of people would say, well, I don't have a portfolio. Parents are socialized not to do much with their money, so they don't think of engaging their children in these kinds of conversations.
But and here where I have a particular problem with that, Peta Rose. Mm-hmm. It is those who are of African descent that have this approach. No, I'm serious. I
agree with you.
We as black people don't understand that we need to teach our children about money, and that money is not the end. Money is a vehicle. All the other ethnic groups teach their children that, listen, yes, money is a vehicle to use to get to where you want to go.
And they're not afraid of money. You know, there's a kind of fear with people of African descent that I've observed, where they have a kind of bean counter mentality towards money. I have my little $100 over here, and I'm going to count it every now and again. Whereas other ethnic groups get the $100 and they're thinking, how can I get that $100 to be $200? And how can I get that $200 to be $300? And so on and so forth. That's not really the mental process that people of African descent go through. What they do is they think of money as being very finite. And I have my $100, and what I'm going to do now is I'm going to safeguard that $100 as much as I can to remain $100. So you remember when I said, why is it that people want to give their money at a prison sentence? Mm-hmm. That's what I mean. You lock it up, right? And it is still $100. You put it in you might have it in an account, but the account basically operates almost like a biscuit tin, mm-hmm, where you put it in, it's not going to grow much. You understand? Because the rate of return is so minuscule. In fact, let me share something with you, Aldo, that's very interesting. When I go out on presentations, I normally ask people to raise their hand if they have a savings account. Now, I just want to make clear I'm not against savings accounts, but I'm against having solely your savings accounts as your sole vehicle of investment. You understand? Because it's not an investment. It's really somewhere where you park emergency money or money that you're going to need in the near term. All right? And a lot of people raise their hands, and then the next question, which would be the logical question to ask, is, so what rate of interest are you getting on this account? And they don't know. And the interesting thing is they don't really care. They don't know, and they don't care.
I don't think it's a sense of not caring, you know. I think by nature they're risk averse.
Well, that's what I mean about money. It is fair. There's a fair factor.
But you see, when you've grown up in an environment where there's very little money.
Well, that's the point.
And you have some money.
Yes.
The fear of losing that, you know, is
greater than the fear of making it more.
There you go.
Yes, and it's, you know, scientifically they've measured this in other places in the world. They have studies on it, which says that the fear of losing is far greater than the fear of making. Mm-hmm. Right? So we as people of color tend to err on the side of fear of losing.
To our detriment?
Well, yes. We have to say that because, you know, the world, money is really, as you said, a vehicle. And that's how we need to start viewing it.
You know, when my eyes were opened up, mm-hmm, when an economist, I sat down with an economist one day and he told me something. He said, Aldo, if you knew the amount of money people had in savings accounts sitting down in these banks, commercial banks, merchant banks, and building societies, earning minimal interest rates, and that there were people who are borrowing these money and making so much money from it.
Yes.
It's almost I can't even describe it.
Yes.
There's so many Jamaicans who have so much money sitting down in these accounts, earning very minimal interest rate, and then there are people who come and borrow this money,
right,
and make so much money out of it, and they are just not getting any of it.
No, they're not availing themselves of what's possible. There's a lot that's possible. I'll give you a little anecdote. There's a lady that works with me at my home, and a couple of years ago I sat her down and I said to her, we need to make a plan for retirement, because the years slip past, and at the end of the day you might be here a long time, and then you'll be looking to me to provide some sort of retirement fund for you. And I won't have the money at the time because I haven't set it aside. Mm-hmm. So I said to her, what we need to do is both of us need to come up with a joint plan of action where we're going to regularly set aside this money and invest it, so at the end of the day there will be something there for you. And she said, fine. And I said, we worked out a plan as to the amount, and although I said to her, times are so hard, do you think you can manage this amount? And she said to me, if money that you don't see, you can't spend. Mm-hmm. Right? So right then and there she made that commitment, and we're still on that road of building that fund, that sum of money, and investing it for her. And the point is that even if you have minimal sums of money, you can make it into something, because that same person, has over $100,000 now. She didn't start off with 100,000. She started off with a very small sum of money. Mm-hmm. But you have to have a commitment to do it. You have to want to do it, right? And then you have to follow through. And what tends to happen in Jamaica is everybody's waiting on the big money that never comes.
Mm-hmm. But hear me now, Peter Rose. Let's talk about another market segment that is key to the development of this country. The small business owner, the small entrepreneur, who has all of his money, his life savings tied up in his business. And I don't think a lot of people understand that commitment that entrepreneur is making.
Right.
Everything that he has on this earth is tied up in that business.
Right.
And he survives based on how that business functions and makes money. Now, within that context, how can he diversify himself, his investment, to ensure that he has a little cushion outside of that business? Because he can't have everything in one basket.
No, but he is an equity investor, and a lot of people in small business don't even realize that they are an equity investor. That's what they are. They have invested in their own business. Mm-hmm. So one of the ways of diversifying is that as your company makes, first of all, small business people tend to fall into the trap of thinking that when the company makes money, it is their money.
Mm-hmm.
Okay,
Big mistake.
That's fatal. You want to have some separation and run your business as if you want it to be there when you pass on.
But Peter Rose, again, there is a cultural problem in relation to this, and this came out of a study that was done at the university. It said that Jamaicans of African descent, by and large, did not see going into business as necessarily a means of wealth creation and for passing on to subsequent generations.
Right.
It was to deal with the immediate family needs, to get the kids to school,
right,
and to look after the family. And once that was done, the business was disbanded.
Right, because historically that's been the nature. We don't have a lot of black-owned and family businesses that have gone on from one generation to the next. We don't. So obviously that is quite true.